6. Investing in aggressive stocks with high growth or bonds with high yield potential. October. This is one of the peculiarly dangerous months to speculate in stocks. The others are July, January, September, April, November, May, March, June, December, August, and February. Mark Twain. When purchasing stocks, bonds, or any other investment alternatives, take care not to time the stock market because you can't predict it. Even the best in the world can't do it year after year. Instead, diversify across time and implement a dollar-cost average investment strategy to diversify across asset classes and across markets. Also, it is advisable to rebalance your portfolio at least once a year to make sure that your asset allocations are still in the correct proportions based on your desired outcome. In any case, how would you really begin? You can manage an investment portfolio by opening an online brokerage account at E*TRADE, https://us.etrade.com, or at Schwab, https://www.schwab.com/, which is the fastest and most affordable way to purchase stocks, bonds, index funds, and an assortment of different investments. To start your investment process, you can choose amongst two investment types: mutual funds or exchange-traded funds versus individual stocks. When you invest in an equity fund, you own a small piece of each of the companies in the fund. If you decide to invest in a specific company, you can purchase shares, notwithstanding, in the event that you are simply beginning to invest into stocks. An equity fund will give you a diversified investment and will minimize your risk of losing money. Investing in individual stocks is risky, and the amount of money that you need to buy a stock depends on the market value of the specific stock. If you are beginning to invest in the stock market, it is best to buy an S&P 500 index fund. However, if you think that an individual stock has long-term potential, individual stocks could be a good investment for your portfolio, but you must remember to diversify your portfolio. Portfolio diversification means that an investor decides to hold in her investment portfolio various types of securities and investments from different issuers and industries and invests in assets that are not significantly correlated with one another. Portfolio diversification is key, according to Warren Buffett. Warren is considered one of the most successful investors in the world and has a net worth of $69.7 billion in 2020, making him the fourth wealthiest person in the world. In the event that individual stocks or bonds appeal to you, figuring out how to research these investments is essential to augment your overall return on your investments. Therefore, it would be a good idea to subscribe to a research company such as the Standard & Poor's, which offers access to individual company financial reports on a subscription basis. A subscription to Morningstar gets you access to reports on 1,800 companies. Their analysts favor companies with a defensible advantage whose stocks sell at a discount to a firm's true worth, which they estimate by forecasting future cash flows. The answer to how to invest really comes down to two things: the time horizon for your goals and how much risk you are willing to take. What is your time horizon? If you are investing for a faraway objective, such as your retirement, you ought to invest basically in stocks. Investing in stocks will permit your money to grow and outpace inflation. As your objective draws nearer, you can gradually begin to dial back your stock allocation and include more bonds, which are safer investments. What is your risk tolerance? The stock market fluctuates up and down, so if you are a conservative investor, it is best if your portfolio has a smaller allocation of volatile stocks. You may want to consider investing in a mutual fund, such as the S&P 500, which will provide you with diversification and minimize your overall risk. However, if your risk tolerance is high and you are a young investor, you have time to play the stock market, and you can win or lose depending on the stock that you hold in your portfolio. Emotion is not your friend when trading stocks. Prior to trading, you must know when to buy and when to sell to achieve your desired outcome. That's how Warren Buffett has made big money in the past, from the bear market of 1974 to the financial crisis of 2008. Be fearful when others are greedy, he famously advised, and be greedy only when others are fearful. The big questions are not when will the economy recover or where will the market go next. The questions to consider include 1. How can I get the highest return with the least amount of risk? 2. How can I protect profits and principal? 3. What can I do to make sure that my investment portfolio will be worth more in the future? Success in investing starts by selecting the right stock, buying at the lowest price, minimizing expenses, and knowing your exit strategy. There are many research companies that can help you with the above questions. My favorite is the Oxford Club's website, https://oxfordclub.com/. Bonds. Bonds are one of the most significant investments accessible for the individuals who have an income investment portfolio and plan to live off the income produced by their bond and fixed income portfolio. There is a wide range of fixed investment choices accessible to you, including municipal, commercial, savings, and treasury bonds. You need to know which of these bonds are the best investment for you based on your overall financial objectives. There are a number of bonds where you can invest, and many more ways you can hold these bonds. Benjamin Graham, known as the father of value investing and a mentor to Warren Buffett, believes that a conservative investor should never have less than 25% of their portfolio in bonds. Municipal bonds are excluded from certain state taxes under certain investment opportunities. If you are in a middle to high income tax bracket, you should hold municipal bonds in your portfolio. Also, by investing in municipal bonds, you can be investing in your nearby schools, hospitals, and municipalities in your community, and also be enjoying a good return on your money. To learn more about municipal, corporate, agency, and government bond offerings, visit the link below. https://www.thebondcenter.com/HENNIONANDWALSH/